Welcome to the last class in Intuit's QuickBooks Enterprise Solution, Accountant version 24.0. Now in this class, we are going to be focusing on reporting, how we report our income statement, our statement of financial position, and also our cash flow statement. Another report we can generate from the software as well as from our postings. So before we go into the reporting phase, let's do one transactions of expense, so we can have expense on our income statement. Let's do a transaction of expense. Now this company, as we all have it, VDEC Manufacturing Limited, primarily is into the manufacturing of blocks and the supply of these blocks for building purposes, and most of their customers are real estate firms, majorly real estate firms, and some construction companies like that. Let's take a look at our customer base for this company. We go to the customer section. So we have two customers. We have Alpha Engineering Limited and Urban Build Nigeria Limited. So this Urban Build is a construction company, and then we want to record a sale transaction, an expense transaction that happened within the company. So probably we bought the major expenses we've recorded previously were on vendors, on we purchasing goods, on our items from vendors. And if you check our vendors very well, we have Eternal Oil Nigeria, Federal Inland Revenue, and Dangote Cement. So we have Dangote Cement and Eternal Oil as the major vendors for this company, and we've done our purchases. And most of the purchases that were done on this section of vendors were directly linked to cost of goods sold or to cost of sales. So they were direct product. Now let's make an expenses that is not directly linked to cost of goods sold, or that is not a direct product. One of the expenses we can do is an expense that is within the organization that we use to run day-to-day activities in the organization. Now let's look at the chart of accounts we have for this company. You come to home, you come to chart of account, go to the expense section of this chart of account. These are all the expense section we have. We have payroll expense, we have office supplies, we have meals and entertainment, we have interest expense, we have insurance, we have dues and subscriptions, right? We have computer internet expense, automobile expense, bank service charge, and utilities. Then travel expense. Let's focus on these two: repairs and maintenance, then travel expense. Yes, let's focus on those two: repairs and maintenance, then travel expense. To generate an expense for those two, let's assume that one of the directors on travel expense. Now one of the directors of the company decided to travel to China on a trip to getting some materials for the company, right? So that travel expense is for the business purpose and is linked to the business expense. So what we do to record that travel expense, we have to click on home. On this section of menu bars where you see file, edit, view, list, favorite, accountant, company, customers, vendors. Now for file, you all know that file is for storage, saving, backing up, and also doing multi-user access. For edit is to change the preferences. You can either have your currency changed, you can have your sales receipt designed or customized from that edit. You can also have your HR tools from that edit. You can have a lot of features there. When you come to preference, you see most of the features we have. The general is for for the format you're going to be using in time. Then you have sales on receipt. You can design your receipt change here. Sales tax. You have multi-currency. You can change your currency to naira. We're going to change this currency to naira. Then you can have job and estimate and the rest like that. So this is it. And I think we should even change this currency to naira now. Well, let's leave it first. We'll change it to naira. So these are the preferences for that. Then for view and list. List is where you find the asset items, your price list, your products, and a lot of them like that. So your item list, your chart of account, your asset items, you find them on list. Then you have favorite, you have accountant. Now for this accountant is where you can either batch enter fixed asset transaction or expenses transactions. You can also enter journals through this accountant center. Yes, you can manage fixed assets on this center. You can do a working trial balance. You can do reconciliation. Then for the company is where you can edit the home page. Most of the items for the company is change password of this QuickBook application. You can manage your currency. You can also do journal entries on that. You can change password and the rest. You can add other users in multi-user access. Then your customers is the section where you can create customer, create invoice, create sales order. Like I explained previously, what a sales order is, what an estimate is, and what an invoice is. The differences between those three. Then for vendor section is on your sales vendors, that's your suppliers, where you can enter a bill, you can also pay a bill, you can track a bill, right? Then employees and the rest. So for this purpose, we are going to, since we want to record an expenses for traveling, one of the directors traveled to China to get um, some materials. So we want to record the amount he paid for flight, for hotel in China, and coming back to and fro, right? So what we do, we come to accountant. On this section of accountant, you come to badge enter transactions. Badge enter transaction. What that section is telling you that this is a section where you can enter a lot of expense items, a lot of transactions in the company. You can enter a lot of them, a large number of them. You can even copy a bank statement on the withdrawal section and not the deposit. On the withdrawal section, customize it to fit this the way the QuickBook will customize it and paste it here. If there are a lot of transactions like that, it will paste everything else together. All voluminous transactions, it's going to paste it all together in this section. So this is the way the format is going to look like. If you're designing it from the bank statement, you have to design it in this format so it can suit what QuickBook wants for you to post it and paste accordingly. It must have date, number, payee, account, amount, and memo. Now for the date is the day the transaction occurred. The number is the either the invoice number or the checking number, right? Then the payee is the person that we receive the money when we send it. So we're sending this money to that person. It's the person that will receive the money. Then the account is the account that will be credited or debited from our QuickBooks. So this is the double entry posting now. Take for instance, we are doing travel expenses. Who received the money for travel expenses will be that traveling agency we're paying to, right? Then the account that will be affected is going to be our travel expense account. That means it's going to be debited. So most items that occurs on this section are debit transactions. So they are leaving our account, they are leaving our bank. Then amount is the amount you are paying for. Then the memo can either be the narration in the transaction. So now let's start with the date. Let's assume that this director traveled in March. He traveled in April 24th, 2026. So we come to this section, 24th of April. That's when he wants no, that's when he was doing the visa and he paid for his flights and his hotels in China and every other expenses. So they build us, this agency build us. Now the payee will be the agency we're paying to. We're going to add an agency. You can't find any of those payee here. So we can just add a traveling agency. We come to others. It's not vendor, it's not customer. It's not vendor because they don't supply us goods. It's not customer because we're not selling to them. It's not employees because they don't belong to the company. It is in orders. So when you come to orders, you can just write, let's assume a traveling agency name, travel tour, um, travel tour global limited. We assume this name. We don't need any other information here. Let's just assume this name. That is the payee. Now the amount we are sending to these guys. Let's assume that um we are sending 500. Let's assume we have to know how much we have in our revenue account before we do that. Let's check how much we have in our bank account so that we don't assume a figure that is above what we can pay for. You come to this view balances. You come to where the UBA. So UBA have 4.7 million. Zenith have 4.7 million. So let's assume that we are sending from the UBA, and the traveling expenses to and fro is like 1.2 million. Assume, because it's going to be more than that. It can take a lot of money. So let's just assume it's like 1.2 million. You come to this account. The account that will be affected is traveling account. So travel expense account, this is it. You click on it. The amount is 1.2 million. So this 1.2 million covers his flight, to and fro, and also um let's just assume 2 million. Covers his flights to and fro, and also his hotel booking. So the memo will be, that's the narration for traveling, for directors, travel expenses, flights, and hotels. Yeah. So this will be it. Let's make sure it's going to UBA. Okay, UBA will be debited. That's what that thing means. So after you're done with that, you come to this section and click on close transaction. Yes, we've closed the transaction already. So we've saved it. It has affected. How do you know? You come to UBA account. It has reduced by that amount of money, 2.7 now from 4.7. So, and what will be affected again is going to be our income statement. That's why I want us to do this transaction before running a report. So we've done that travel expense. We don't need to do any other transaction again. Let's just leave it at that. Or should we record for repairs? Let's record for repairs. The same format for repairs. Let's assume that repairs is coming from our Zenith Bank. We're debiting Zenith Bank on 7th of May. Payee. Now the payee is going to be the person we're paying the money to, that will come and work on on the equipment we have, our machineries. Let's assume it's a repairing company. Mm, mm, the banco, the banco automobiles will be the name of the limited. So we repaired one of our machines that we're using to produce so we'll take it to which account? Repairs and maintenance account. We repaired it for 200,000. Repairs to mixer machine. Yeah. So we've recorded 2 transactions now, and that's it. It has been saved. Let's go back to let's change this currency to naira. I think we should do that. Edit, preference, multi-currency. Yes, I use more than one currency. So the only issue with this is that once you click on this, you will not be able to do payroll with QuickBook, because it's not going to recognize another currency. But if you decide to do that, then you just click on yes and yes. So to change it, you now select your currency. You see naira, you change it. So all your currency now will now be denominated in naira. For now, let's hold on that. We're going to still change it, but let's hold on that first. Now that is that for recording expenses. Now let's see our reporting phase. We want to extract a report based on all our information. Want to know our profit, want to know the health of the business. We've not recorded more assets to know the health. Let's see the chart of accounts and let's know the assets we have. We don't have, okay, we don't have any fixed asset. All the fixed assets are zero. So I think we should add a fixed asset before we do that. So one of the fixed assets we use is the mixing machine. Yes, let's add that. Let's leave furniture and equipment. Let's add new. Click on add new. Come to fixed asset. Yes, continue. Fixed asset name, plant and machinery. Description, mixer machine for mixing products on production, mixing the gravels and the rest like that. Enter opening balance, no, leave it blank. Save and close. We've successfully added that asset account. Now most of these items will be classified by account numbers. We cannot find any account number yet. So what do? We come to this edit, preference, right? Now we go to accounting, company preference, use account number. So it's going to classify our account based on account number. You can see them. Now this plant and machinery is not having account number. What we do is to add account number to it. 1500 accumulated division of that furniture is 1700. Now let's add plant and machinery to be the account number. We'll come and edit it. Let's make it 1600. Account number will be 1600. Save and close. So it will follow that suit. It will arrange accordingly. That's it for that. Now after that, we have to buy a fixed asset. So we can have amount in this fixed asset. Now we'll do the same thing we did. Come to company, come to accountant, badge enter transaction. This is the date we bought. Let's assume we bought a fixed asset in March, on 1st of March. We bought it for, in this page section, we bought it from one company like that. Others, we bought it from one of our machine. We bought it from this same autos guy. Let's use him. This the banco, we bought it from him. Account. So we're going to be creating this fixed plant and machinery account. We bought the machines for him from, let's assume we bought it for 1.5 million. Purchase of mixer machine, right? We bought it. Let which account have money from our Zenith and UBA. We have money at Zenith, so let's use Zenith account. Yes, and close. So we've recorded it. Now if you come back to your items of account, you will see the fixed asset that it has added by 1.2 million. You come back to your chart of account, 1.5 million, sorry, you can see it, 1.5 million. Let's recognize the fixed asset also in QuickBooks, so that QuickBooks can know the kind of assets we have. So where you see accountant fixed asset item list, you go there, you click on it. After clicking on it, you right click on this empty box and add new. So let's recognize that fixed asset we added. We call it mixer for mixing product. Let us call it mixer. Account, asset account is going to be plant and machinery. That's where it's going to. Purchase description, is it new or used? Let's assume it's new. Then when you want to sell it, you make use of this sales description. So let's leave it when you want to dispose it. Then The date we bought it was, let's assume we bought it in on the 1st of February. The cost we bought it was 1.5 million. The exact cost we wrote there. What date we did write in that? I think the date we wrote in that one was March that we made that payment. The vendor of pay is going to be that the Banco Automobile Limited. Asset description: asset mixer for mixing products on site. This location, PO number, you all see that in the asset. The warranty expires. Let's assume that it's 1 year warranty that we were giving. So it's going to end in, we bought it in 1st of March. It will end in 1st of February, right? I think that's 1 year. First to first, you can add your note. Then just okay. You must have a purchase description. Okay. Mixer for mixing product on site. Let's just use that. Then okay. We've created the asset account. Now this is it. So that's all. Now let's go to reporting. We want to report now. The first report we want to generate is income statement for 2026 as at this date. That's as at today. Just for 2026 as at today. Let's see what we have in our income statement. You come to report. You come to company financials, right? Profit and loss standard, profit and loss detailed. For this too, the standard is going to show you profit and loss in a way that it's not going to be combining a lot of details like notes and the rest, but the details is going to show you a lot of information that is within this, like above the standard. So let's do then why this year to date, YTD comparison. It compares different years together, right? Then you also have previous year comparison. You also have loss by project, by jobs, by class, and the rest, like the balance sheet standard. So let's first address profit and loss standard. Let's know the profit of this company so far for this year. Profit and loss standard, click on it. This month to date. So it's beginning when? From 1st of May. No, we're not doing this month to date. We're doing this year till date. So from 1st of January, you click on this month to date. Either you click on this fiscal year to date, this one here, or you come and customize it. Click on this custom and customize this date. But for now, we don't need to customize this date. We just click on this fiscal year. Now to give us our income statement for this fiscal year, right? It will give us our income statement for this fiscal year. So we can see that there's no item of revenue here. What we have is cost of sales, cost of cement, and this is what we spent on. That means it's either we've not made a sale for this year. It's either we've not made a sale for this year. Yes, probably we've not made a sale for this year. So let's check our sales we've made and the years we made those sales, because we need to start with a revenue, because this is showing a loss, right? So you come back to this home page. You come to your view balances. Account receivable 1.2 million. Let's see what happened there. We sold to this guy, we sold to this guy, we sold to this guy, we sold to this guy. All of them are owing us 1.2 million. All right. So we made sales, but the year we sold to them was in 2025. 2025, 2025, 2025, 2025. So we've not made any sales for 2026. This is not a sale. This is 98. I think this was the only sale we made in 2026, and they paid the invoice 698. So we've not made any tangible sale in 2026. So what we need to do now, okay, this is the sale we made in 2026, 650, and we paid the invoice. It's very small. So what we'll do now is to add the units that quantity that are buying, so that this figure can be big, and we receive payment. So this is what the invoice we issued to them, and we receive payment based on that invoice. So we're going to add the quantity. Let's say 9 hollow blocks, 650 per block. So we cannot buy one block alone. Let's assume that we bought 200 blocks. Yes. To increase it, no, let's still make it 2000 blocks. Okay. Let's make it 20,000 blocks. It's too much. We can make it 6,000 blocks. Okay, 3.9. So that's fair enough. Remove that, you have 4.195. Okay, that's fair enough. So let's, by editing this invoice, now these are some of the this thing you find out. You save and close. It has edited our invoice automatically. It has increased our sales by that. Now let's go to receive payment, because the receive payment has to be edited. We received that payment on 26th of March. From which account? We find it from here. The name of the customer that we sold to is Urban Build. We sold to Urban Build. Just come to your home page. You come to customer section. Type in Urban Build. Let's see the transaction he has done. This is the guy. So let's generate the transaction he has done. This is a transaction. So estimate account receivables, payment on the, this is the payment for that. So we need to receive payment based on this amount of invoice. So we have to edit this payment now and right click on it. You will receive the payment based on the invoice amount. We cannot receive 698. We're going to receive the full amount. Yes. Okay. You can also edit it from here. 419 to 500. Good. So that we can have sales in the company. So this is the amount. You expand this. This was the previous deposit that was done. We cancel it. We delete deposit. Okay. Deleted. So let's go back to our receive. Our receive payment. So the amount we have to receive is 491 to 500. Change it here also. This is the invoice that needs to be affected. Good. Okay. Sorry, 4192, not 4912. 4192. 4192 500. So that's it. So this is it. We're going to save and close. You can write outright payment. You paid everything. So save and close. So with this transaction now, we can be able to get sales for this year in our income report. You come and record the deposit now, so that the bank account can have that money. Okay. On this date, okay. UBA is receiving the money. Fine. So now let's go back to our report and rerun our report. We must have a profit. Come to report, company and financials, standard. Now, this fiscal year, you can see that we're now showing a profit of 1.2, but it's not capturing, it's not showing the revenue up. So the revenue is hidden somewhere. So we're going to find it. So since you can't find the revenue here, that means the revenue is hidden somewhere. So how do you do it? Let's check where we credited our products items to. They're supposed to go to revenue account. So we come to this side, items and service, hollow blocks. The account that is going to be credited is not cost of sales, you see. So it's supposed to be a revenue account that will receive that money. So that's why the money is hidden. It's going to come to sales account. So all our items we are selling will be credited to this account, sales account. Then solid blocks, sales account, and So leave the VAT items. So let's rerun our report. Company and financials, profit and loss standard. Then this fiscal year, automatically our revenue is back. Can we see it now? So we have sales 3.9 million. We have cost of sales, cost of cement 500,000. Then we have gross profit of 3.4. Then the two expenses we recorded were repairs and maintenance, then travel expenses. At the end of the day, our total expenses amounted to 2.2 million, and we were left with a net profit of 1.2 million. So that is how you do reporting on profit and loss for QuickBooks. Then let's go over to balance sheet. Based on that asset we reported, let's know the health of the business. So you come to report, you come to company and financial. This balance sheet will show you the asset, the liability, the equity of the business, right? So for the asset, we are expected to see a fixed, that's a non-current asset, and a current asset. For the non-current asset, we are expected to see furniture and fittings. Then we also expected to see plant and machinery. Then for the current asset, we are supposed to see our bank account there, our receivables account there. Then for the equity section, we are supposed to see the members' equity, either member one or member two. They call them directors, right? Then we're also supposed to see on the non-current liabilities, if there's any loan, long-term loan, we're supposed to see it there. Then for the current liabilities, we're supposed to see payables. That's our trade payables account, right? So the two things we're supposed to see on non-current, this account receivable will fall under current asset. This same figure, that's what we're supposed to see in current asset. This account payable, we're supposed to see it in current liabilities. This bank account figures, we're supposed to see it in current asset. This other bank account figure, we're supposed to see it in current asset. It might join two of them together or it will separate it. Then that's it. So let's go to report, financials. We come to balance sheet standard. We click on it. Now this is it. Okay, they separated the bank account. Now this is our current asset. UBA Zenith. This is the account. Total current asset. This is the figure. You can customize this sheet the way you want it to be, in any standard you want it to be. This is account receivables. Also, like I said, you are supposed to see them in our current asset. Then coming to fixed asset, we're supposed to see plant and machinery in our fixed asset. Furniture and fittings, we do not buy any furniture and fittings, so there's no figure for that. That's why it did not appear here. So our total asset is now the combination of fixed assets and current assets. It give us 12.5 million. It's supposed to be equal with the liabilities and equity. So what are the liabilities? Like I said, account payable falls under the liabilities. Sales tax payable. That means this sales tax, they've not remitted it yet. It's payable, so it still falls under current liability. This sales tax here. Then you can call it VAT. You can change the name to VAT instead of calling it sales tax. Then these are total liabilities. Then we also have member equity. We have member 3, member 2, member 1. That means we have 3 members, right? Member 3, 2.5, member 2, 4 million, member 1, 3.5. Then we have retained earnings of 150,000, and also we have net income of 1.2. So at the end of the day, our total equity amounted to this figure, and total equity and liability amounted to this figure. So the balance sheet equation later balance. Assets equals to equity plus liability. So we have it as total asset equals to equity plus liability. That is how you report for balance sheet on QuickBooks. So it also has a section for reporting either accrual or cash basis. For your income statement, you can report your income statement on cash or accrual basis. Accrual means all revenues are recognized when they are earned, and all expenses are recognized as well when they are it's not necessarily when they are paid for. Yes, it's not necessarily when they are paid for. So that what that means is that in as much as you're selling, as long as a debtor has made a commitment on his invoice, that invoice automatically makes them payable and receivables, right? When a debtor wants to buy something of 12 million and he pays 4 million, accrual concept would state that your revenue you'll be recognizing will be the full 12 million. Why cash basis will tell you that the revenue you should recognize will be only the 4 million that he paid. That's just the difference between them. Also, that applies to payment section. When you're making payments, the concept also state that all payments that will be recognized on accruals will be payments owing. Probably you bought from vendor as a business, and the amount you owe to that vendor is like you bought something of 5 million and you were able to pay immediately 2 million. You're still owing 3 million. Accrual concept will state that recognize the full 5 million. Why cash concept basis will state that recognize just the 2 million. That's how it works for you. Then if you want to test that, you can come to the income statement, profit and loss. This is the income statement. You can decide to test it this fiscal year, right? Or let's do all all the whole years from 2024 to 2026. Now let's report it based on cash basis. This is accrual. That means it has recognized all the revenue, both the invoices that are still owing and that those that have been paid. Now let's recognize in cash basis. You see that this revenue account will reduce. That reduced to 3.9. That means they recognize just those revenue that were paid for. Then the cost of sales as well, the same thing. So for this purpose, we're going to be using accrual basis. Now we've reported our balance sheet. Let's go over to cash flow statement and see how it looks like in this. Let's see how it looks like in this account. Cash flow statement. We come to statement of cash flow. This is it. You click on it. Now this statement of cash flow, we're going to report it this fiscal year to date. Yes. Our net income, like we got in our previous account, started with 1.2. Adjustment to reconcile net income, like sales tax, VAT payable. You're adding back the sales tax. As long as that money is still within the company, it has not left. They've not remitted it to FIRS yet. It is going to still be added back. We just want to know our cash in hand. You know what cash flow statement means? The statement that shows the actual cash or the cash and cash equivalent of a company after accounting for the after accounting for both investing activities, financing activities, and operating activities, right? So this is it. So we have the operating activities here. So with this figure, plant and machinery that we bought is part of investing activities that reduce our cash now by 1.5 million. So we now have for financing activity, we don't have anything in financing because we did not borrow loan. If it was a case that the business borrowed loan, it will increase this cash in hand, right? By the financial activities. Then you now have cash at the beginning of the period. So you bring back your cash at the beginning of the period. You now have your cash and cash equivalent at the end of the period, right? Your cash and cash equivalent at the end of the period. So that's how it works for cash flow statement. So cash flow statement, you cannot choose between accruals or cash basis. No, cash flow statement is fully cash. So it's cash basis they will use to recognize that. So you don't have a principle that separates them. Then the report you can do report for trial balance, come to accountant and tax. So most tax guy that wants to prepare report from an incomplete statement or a business, they can use the trial balance to do that. So when they generate the trial balance by clicking on accountant and taxes, come to trial balance. If you click on it, you'll be able to generate trial balance for this company. And this is the trial balance of the company. This is what they can now use to prepare all their accounts. They can prepare income statement from here, they can prepare balance sheets from here, they can prepare cash flow from here by themselves. Then another report you can do industry specific, okay, contractors and the rest. You can do budget and forecast. You can decide to do a budget report for this company. You can do receivables, the aging receivables, based on the amount of time period we allowed to them. You can have aging receivables on this software as well. Yeah, that's it. So that's it about reports preparation on QuickBooks. I believe there's a lot that has been learned on this. It has a lot of features. It has a lot to learn. Once you start using QuickBooks Enterprise as an accountant, it provides you a platform to learn also, because you're going to be looking at most of the principles you have or you've applied in accounting being practical on the software. Yes, and you can only use the software when you understand the principles of accounting. So it's very much advisable you get to know the principles of accounting, basic principles of accounting, and understand it very well before attempting to use the software, right? So that you can know why this posting is like this. Why do we have to post this account? Why do we have to separate it like this? When a revenue is being a sale is being made, which account is being affected? If it's received by cash, definitely our cash account will be affected and the sales account will be affected. If it's not yet received by cash, the receivables account will be affected and also sales account will be affected. So those are the basic principles, especially the principle of double entry, that you need to have while using accounting software. Thank you so much for your time. Thank you so much for your attention to this software. Thank you so much for um, creating out a lot of time to practice, to go through, to understand, to and to also apply to wherever you find yourself or wherever you're working. So I believe going forward we are going to will not do QuickBook anymore. Going forward, we are going to be going to another software. This time around, we are going fully into online an online software that is that's actually making wave as well. It's also making wave in the industry. It's an online software. That will be the next plan we're going on to. So get ready. It's the softwares. All the softwares are actually, you just understand the principles of accounting. You can use. They're actually related. Most of them are having the same functionality. You just understand the principles of accounting. You'll be able to apply them very well and use them. So we'll be going into the online phase of another software, but it's not going to be QuickBooks. It's going to be a different software. It will be unveiling on our next video, on our next class, and I hope to see you there.